We're speaking now with Himanshu Baid. He's the MD of Poly Medicure. The company has raised 1,000 crore rupees through a QIP and approved an allotment of 53.19 lakh equity shares. It was at a price of 1,880, so a discount to Thursday's closing price at least. Mr. Baid, a very good morning to you and great to speak with you here on NDTV Profit. Let's start with the basics. What is the purpose of this fundraise, the 1,000 crores you've raised? Can you lay out for us the plans going forward?
See, basically, we are setting up 3 new plants, and basically this is for expansion of our dialysis renal business, cardiology business, and critical care business. And most of the products we are going to make are going to be import substitution products. So that's where the investment is coming in. And then part of the money would be, kept for some acquisition opportunities, which we will look in next maybe 6 to 8 months, and also, for general corporate purposes.
We were speaking this morning, and of course, you're in the business of manufacture and export of medical devices. Mr. Baid, we were speaking this morning on the show about Mpox and, the first case in Thailand. I mean, we don't know where it's going to go, but there have already been statements globally, at least from vaccine makers, saying they're ready if they need to be, etc. Just trying to understand your perspective on this. Clearly, the demand for things like disposable syringes is going to go up.
See, we are not in disposable syringes. We mostly do pre-filled syringes and some other products. But I think this is a pandemic we have to watch out for. And I think what I heard recently from, some vaccine companies, but they were still in the development phase of the vaccine. So I think we have to be careful. I think Indian government has to watch out at the borders, and maybe screen people at the borders, maybe if there is a screening mechanism to do that. But I can't talk much about it because it's not our area of interest right now.
All right, that's all right. Just wanted to get your perspective because you're in this space, and that is on top of mind. Let's come back to what you do. Let's talk about what the pricing mechanism is in your sector. Now, you already told us you've raised 1,000 crores. You want to start 3 new plants. You're focusing on 3 specific segments. What is the kind of pricing mechanism you're expecting? How frequently do you take or can you take price hikes?
See, basically, we are looking at import substitution right now. And when we look at import substitution, definitely will be cheaper if we make these products in India. And also, when you look at pricing, we probably are around 30-40% cheaper than what is being imported into the country today. So for us, that gives us enough room to go for, further price hikes as we see raw material prices changing. But I think even at that 30-40% discount, we'll be able to hit our margins, what we have been projecting for in the beginning of the year.
Mr. Baid, good morning. It's also Samina joining in. Congratulations. Your QIP has been subscribed by some very marquee names, Lighthouse, SPI, Nomura. I mean, you've got the creme de la creme who's betting big on Poly Medicure. So congratulations, and I'm guessing lots of strategic advice as well will come from them. But you had indicated that you want to make these investments for expansion. Now, the expansion plan, till they become revenue accretive across dialysis, cardiac care, and critical care, what is the time horizon and what could be the key growth drivers between now and, say, the next 2 to 3 years until the time that these facilities come to stream?
See, basically, if you remember, we had also did a fundraise in 2021. And out of that, we had, invested in, 4 new plants. And almost 600 to 700 crores were invested there. So all the plants have gone live. And as we speak, they're getting populated with more equipment, more machines. And that will help us to, initially, that momentum we are carrying with 20 to 22% growth, that will carry through these 3, 4 plants, which new plants have come up in last, let's say a few years. And once these 3 additional plants will be ready by end of 2026 or early 27, I think we'll be able to then, catch up with that momentum again and continue with that pace. So that's the whole idea that, this industry has a long gestation period because this needs a lot of technology and also a lot of regulatory approvals. So we are trying to, match up with the pace, ensuring that we have enough capacity available to grow. And because Polymed is exporting 70% of its products, so we are also focusing on global markets, but we can sell the products which we are going to make in India for the global markets.
You've received approval, I believe, for 4 products in the US FDA. Another 8 to 10
Yes.
products are awaiting approval. The 4 that you've received approval on, how much will they contribute to your top line? And the 8 to 10 that you're waiting on, when can we expect some news on that front too? And when will it be revenue accretive largely?
So basically, the sales to US has started already, and we've just started in this current quarter. And of course, we had some other products which were already selling earlier, but the new products which we have received FDA approvals, we've started revenue for that. And
How
as
much,
we have already,
Himanshu, how much do they
I'm giving
currently
guidance.
contribute and where do you
Yeah.
see it at the end of the year and the next 2 to 3
See,
years?
we have not given that close guidance, but we have given a guidance for 3 to 4 years, and we are expecting a revenue around 15 to 20 million dollars from the US market in next 3 to 4 years, and I think that's already started picking up. Now, this year, I can't give you a very definite number, but should be in exceeding maybe $2.5 to $3 million.
At a more macro level, where do you see volume growth? Because I know domestic, while may not be the big focus for you, it's a market you cannot ignore. And we've seen that with a lot of pharma players as well recently, but the domestic business is showing signs of revival and, of course, opportunity. Where do you, or what would you like to see your domestic business grow at? Because that is in single digits from what I've seen in the first quarter of FY25. And where do you see volumes, what is the percentage growth we can expect from the company over the next 2 to 3 quarters?
So I think for the current year, we expect the domestic business to grow between 20 to 22%. And the first quarter, the business was slightly lower because of certain government businesses we had in the previous year of the first quarter, which are not there anymore. And because of that, we saw a little dip. But on the trade side, which is the majority of our business, it has grown very well, grown around 25% even in the first quarter. And hopefully, we'll continue. I think we see that great momentum going on. Already, healthcare in India is expanding, and we are getting into all large hospitals today. So we should be able to reach around 20-22% for the whole year.
So, Mr. Baid, am I understanding correctly that on the domestic side, you want to move away from government business
Yes.
and move completely to trade?
Yes, that's correct.
What is the thought behind that? Because the government is a big buyer as well. There's a lot of schemes and programs. Just want to understand the thought process.
We will be there in government contracts, but basically we want to focus more on the trade because see, today 75% healthcare is now in the private hands, private sector. And government is now becoming more like a payer than, let's say providing healthcare. Because you have Ayushman Bharat, so government's focus is moving more towards the payer side. So I think and that is given, the care is given by the private sector today. So I think future will be, government will be focusing more on the paying side than being a care provider. So for us, the focus, the momentum will shift to the private side. And I think today private sector is going much faster than the government sector. And that's the reason that we are focusing there.
What capacity are you at currently, sir? Because if you're adding so much more and so much more is coming on stream from 2021, I'm just trying to understand the demand-supply mismatch, if there is any. That will give us a sense of your pricing power too.
See, currently we are operating around 75% plus capacity of all our plants. Technically, we can go up to 80% max. That is what we know because we also have, changeover times in manufacturing processes. So that's where we are. But today, I think we almost run at full capacity, what we are doing right now. And as Polymed is exporting to 120 countries, I think demand outside India is also growing very, very fast because we are seeing that China plus one, which is playing out very strongly now. And no new investments are going to China in last, few years. So I think Polymed and India is very well poised to attract new investments, new customers in the medtech sector. China is 150 billion today. We are just 15 billion. So there's a big opportunity sitting in front of us as an industry to go to global markets.
And that import, the China import is what impacted you last quarter. But luckily that list...
No. Because see, the good news is that industry is fully regulated today. And I think that happened only on 1st October 2023. So I think after that, I think government has gone very strict with regulatory, bringing the regulations, bringing the standards in medical devices, which never existed before. And also, with strong support, internal support, from the CDSCO, where they are trying to now, control, products through testing, even at the customer end. I think that is going to change, being a big change in the quality of medical devices
Right.
which are sold.
Right. Himanshu, very lastly, before we have to let you go, a quick word on any upside on margins. I know you've guided for quite healthy and expansion of 150 basis points. Any upside on margins for FY25? And will they progressively improve going into the next 2 to 3 years? Because like you said, the regulation in India should also definitely aid players like yourself. And any big bang FDI approvals that we could be looking forward to from you?
See, basically, we have already guided very well for the margin. I think company is doing very healthy. Last year, we had 26%. Now we are talking about between 27.5% EBITDA margin this year. And I think as we go more in critical care, I think we will see some improvements. But I can't tell you much about it right now. But I think as time progresses, our target is in next 2-3 years, if we want to reach by around 30% EBITDA margins. That's what we want to reach.
Right, good luck. Congratulations again. I'm guessing you're going to this weekend laughing with all your new stakeholders at Poly Medicure.